This is Professor Russell James coming to you from Texas Tech University. Welcome to today's lecture from Visual Plan Giving, an introduction to the law and taxation of charitable gift planning. Welcome to Income Limits on Charitable Deductions, Part 4, Carryover Deductions. This is Professor Russell James. So far, these lectures have reviewed the income limitations for charitable deductions from different types of gifts to different organizations. But what happens when these income limitations are exceeded? When income limitations are exceeded, the charitable deductions are not lost. Instead, the excess deductions must be carried over to future years. As soon as there is a year in which the income limitations are not exceeded for the type of charitable deduction carried over, those deductions may be used. However, the deductions must be used in one of the 5 years following the year of the gift. Otherwise, the charitable deduction will expire. Regulation 1.170A-10A1 and PLR 8824039 indicate that excess gifts, quote, for the use of charity cannot be carried forward. But IRS Publication 526 and PLR 200010036 indicate that they can be. This chart is a visual demonstration of how unused charitable deductions may be carried forward. In each year, the dashed line represents the charitable deduction maximum dollar amount for this type of gift. In year 1, the donor gives more than the charitable deduction maximum level. The portion given in year 1 up to the income limitation is shown below the dashed line, and that part may be deducted in year 1. The amount above the dashed line in year 1 must be carried over into future years. In year 2, the donor makes additional deductible gifts, designated in dark text. Note that gifts made during the year will be counted first, prior to counting any carryover deductions. After counting these gifts made in year 2, there is still remaining space under the income limitation maximum for year 2. Thus, part of the carryover deduction may be used in year 2. In year 3, the donor makes gifts up to the maximum income limitation. Consequently, no carryover deductions may be used in year 3. Finally, in year 4, the donor again makes gifts, but there is still remaining space under the income limitation maximum for that year. Thus, the remainder of the carryover may be deducted in year 4, leaving no additional carryover for future years. When a donor has carryover charitable deductions from multiple years, the oldest carryover deductions will be used first. This rule is advantageous to the donor because carryover deductions will expire after the 5th year following the year of the charitable gift. So the donor would prefer to use the oldest carryover first to reduce the risk of the charitable deduction carryover expiring. In the example in the chart, the donor gives more than the income limitation amount in both year 1 and year 2. In year 3, the donor gives less than the income limitation maximum, allowing for the use of carryover deductions. The carryover deductions from year 1 are used in year 3, and not the carryover deductions from year 2, because the carryover deductions from year 1 are older. In year 4, the donor makes gifts up to the income limitation, and thus no carryover deductions may be used in that year. Finally, in year 5, the donor again gives less than the income limitation maximum, allowing the remainder of the carryover deductions from year 1 to be used. After all of the year 1 deductions from this type of charitable gift are used, only then can the carryover deductions from year 2 begin to be used. These scenarios assume that the donor uses all of the charitable deductions generated in each year. But what happens if a donor with carryover charitable deductions takes no itemized deductions for a year and instead takes the standard deduction? Taking the standard deduction is an alternative to taking individual itemized deductions such as the charitable deduction or mortgage interest deduction. Even though the donor uses no itemized deductions in the year when he or she takes the standard deduction, the carryover charitable deductions will be eliminated as if the donor used as much of the charitable deduction as would have been possible. In other words, up to the income limitations if the donor had itemized deductions. In this example, the donor made excess charitable gifts in year 1, generating carryover charitable deductions. In year 2, the donor made some deductible charitable gifts but chose not to deduct those gifts in favor of taking the standard deduction. Even though the donor does not use any of the carryover deductions in year 2, these carryover deductions will be eliminated as if the donor had used as much as would have been possible had the donor itemized deductions. Thus, the donor will lose carryover deductions in the amount of the difference between the income limitation in year 2 for this type of gift and the deductible gifts made in year 2. This unpleasant result means that using the standard deduction is not an effective way of preserving carryover charitable deductions. Next, in this example, the donor makes deductible gifts up to the income limitation for this type of gift in year 3, meaning that no carryover can be used in year 3. And finally, in year 4, the donor makes additional gifts, but not up to the maximum level, thus leaving room for the remaining carryover deductions to be used in that year. The previous example considers how the donor can use these carryover deductions during the 5 years following the year of the gift. However, what happens if the donor dies with unused carryover deductions? The answer, unfortunately, is that carryover charitable deductions are simply lost at death. For joint returns, the amount of carryover lost is equal to the carryover that could have been claimed by the decedent if the couple had filed separately. Thus, when a donor makes charitable gifts in excess of the income limitations, there is a risk that those carryover deductions may not ever be used. This could happen because the donor's subsequent income limitations, after absorbing current giving deductions in each year, are insufficient to absorb the carryover deductions, or because the donor dies prior to using the carryover deductions. This has been Income Limits on Charitable Deductions, Part 4, Carryover Deductions. Join us next time for Part 5, Complex Combinations.